Well, what did I tell you? If you look in the description of my video from last week when the NASDAQ was down only 20%, whereas yesterday was down 28%, almost 30%, in that description, I said, watch for the Fed to pivot when the S&P gets down about 17%. Somewhere between 17 and 20%. If the Fed's going to pivot, that's where we'll see it. Yesterday, the S&P was down 17%. This morning, it looked like there was going to be a little bit of a bounce, and then when stocks opened, the trapdoor opened up, and the stock market gave up. All those great gains, the rally was quenched, and then lo and behold, out walks this guy Waller, who I'd not heard of before, from the Fed. And Waller waxes dovish. He comes out essentially sounding like, you know what, these rate hikes aren't going to be so bad. We don't like all this instability. And that's code for we don't like it when stocks go down. And I don't need to get into the details of everything he said, but what you need to understand is that his words were being interpreted as sympathetic to the stock market. Waller sounded like he was more concerned. Again, you have to read between the lines. He doesn't ever really mention the stock market, I don't think. But he basically made it clear that he was more worried about stocks than inflation at this point. That's how it was interpreted. And that saved the stocks for a little bit. And we ended up closing, very little changed. But make no mistake, this is the beginning of the Fed pivot. They didn't send Powell out immediately. Powell's not coming out himself and saying, oh my gosh, we're going to flip-flop. But somebody from the Fed came out. And, hey, maybe it's a fluke. Maybe this Waller guy, they're just putting him out there like as a trial balloon. This isn't going to necessarily be, the direction that the Fed is going. But we're at that target range for the S&P that I warned you about, that the Fed was going to start to try and change course. And so if the Fed wants to go ahead with this and put a floor in the market, the talk that we heard out of Waller, we're going to start hearing from more and more people at the Fed. Now, this feels like whiplash, considering just last week we had Kashkari sounding hawkish, and he's supposed to be the Fed's Uber Dove. Although this Waller guy was pretty funny. One of his comments that I did see today is that he said that Trump picked him because he thought he was going to be an Uber Dove and a super low interest rate guy who just loved to print money. Because that's what was in the best interest of Donald Trump. Donald Trump was not a guy who was worried about, the Fed printing too much money and distorting the economy. Trump understood, hey, low interest rates, asset price inflation, this makes me look good. So even though if you just look at the chart, or actually, no, I shouldn't say, the chart actually is pretty exciting. But if you just look at where stocks closed today, it looks pretty boring. They closed very little change. I think the Dow was a little down, and the S&P and the NASDAQ were a little up. And by a little, it might have been something like 0.5%. But considering, we've had so many 3% plus down days, that's a pretty mild change. But intraday, we had quite a bit of volatility. And hey, we closed off the lows. So people can celebrate that. Hey, just because we closed off the lows, that can be seen as bullish. And we'll have to see for the rest of this week if this is the week that the Fed turns this party around. If the Fed starts, dropping more trial balloons about, hey, maybe we should be more dovish. Maybe this whole inflation thing will just work itself out. Maybe we just should stop caring about it. If this is the case, we're going to hear, before Powell comes out, you're going to hear Kashkari come out and walk back his statements from last week. If this is the beginning of a Fed pivot, Kashkari's going to come out and say, you know what, Mia, maybe neutral is not as high as I thought. Maybe neutral is actually more like 1% and not 2%. Because again, when the Fed says, hey, we think the neutral rate is here or wherever, that's them telling you where they want, how much they want to hike rates. when Kashkari said, and Kashkari, the super ooper dove, said the neutral rate was 2%, that's the Fed saying we're going to hike another 125 basis points from 0.75% now all the way up to 2%. That's more than doubling the current Fed funds rate. That's not something that would be good for the stock market. It wouldn't be good at all. And like I said, that 20% number, it's a big deal for Powell. We're right on the edge. If he doesn't turn things around this week, if we don't put in a floor, it doesn't have to, lead. We don't need a huge relief rally necessarily. But the Fed needs to put in a floor if they don't want the S&P to fall below that 20% threshold. Because if things continued the way that they did yesterday and the previous week, we would have closed Friday going into a weekend with the S&P 500 and the NASDAQ in a bear market. Remember, the NASDAQ, those are the lowbrow stocks. Those are all your techie stuff. It's more speculative. It's higher rates of return. The Fed can live with the NASDAQ being in a bear market. The Fed cannot live with the S&P 500 in a bear market. It's offensive to their sensibilities. Now, is it possible that today is a major pivot point in the history of this crash? Will we look back on today and say, you know what, today was the bottom? Probably isn't the bottom, but could it be the start of a bottoming? Yes, I think it's possible. If the Fed goes full-on flip-flop right now, I think there's still a chance that because the market is so desperate to hear for the Fed's attention. They want Daddy Powell to come in and to say, I hear you, I understand you, and I want to protect you. Right now, those words could bring Wall Street back. It could rekindle their spirits, and it could lead to a buying frenzy. That's how depressed, I think, sentiments are on Wall Street right now. Wall Street feels totally abandoned by the Fed. They thought that Powell was their Lord and Savior, and here he is leaving them out in the cold. And so if he just gives them a little bit of his attention, I think that it can make a big difference. But in order for that to be the case, this Waller speech has to be not a fluke, not an overreaction. It has to be the start of a new trend. And with that said, I don't want to overstate the significance of today. Just because today was not an extremely terrible day for the stock market doesn't mean that all of a sudden, hey, everything's okay again. We're going to get back to normal. Stocks are going to make new all-time highs. And then in another 2 months, they're going to make another new all-time high. And then in another 2 months. And we're just going to go back to the way things have been for the past few years. Because that's not normal. In seeing stocks crash, what we're witnessing is a return to normalcy. Valuations are coming down off of their absurd highs and returning to a more of a historical norm. Remember the old Buffett indicator? And I'm not a Buffett guy, trust me, but what they call the Buffett indicator is a pretty useful metric. It's called market cap to GDP. We don't even talk about it anymore because it's absurd. I don't even know what it is anymore, but I do know that stocks would have to plummet probably by more than half of their all-time highs in order to return to a somewhat normal, historically speaking, market cap to GDP. The value of the stock market relative to the overall economy has been crazy for many, many years. And so that doesn't go away with the Fed's, whispering a few sweet nothings into the ears of all the traders and all the algos on Wall Street. Tomorrow could be just as bad of a day as Monday. Just because Tuesday wasn't a terrible day doesn't mean it was a good day. And I have to say, it's strange, it's concerning in a way, how orderly this sell-off has been. Because normally when you've got a lot of volatility moves in two directions. It goes up, it goes down. High volatility means there's some days you're going to have massive sell-offs, other days you can have massive rallies. We haven't had any real big green days for the stock market. It's just been lots of selling every single day. And today wasn't a big rally. It wasn't a reaction. It wasn't, there wasn't any sort of a bounce. It just kind of, meandered. True intraday, we did have a bit of a rally in the morning, and then that fell off, and then, spiked up a little bit, and then came back down to earth, and we closed about flat. But when you have a high volatility, you expect to have days that are as extremely positive as there are, on the days that are extremely negative. But when you're heading into a bear market, you would expect there to be more bad days than good days. But the intensity of each of those days should be relatively comparable. And to be honest, I think that maybe the reason, I don't want to go too far because people try to rationalize the stock market to death, and the stock market is just frankly not that rational. So we can't explain everything down to the last tick, using efficient markets hypothesis. But I will say that I think that the Fed's consistency up until now, essentially saying, yeah, inflation is too high, we are going to need to jack up rates, we're going to need to end QE, which is supposedly going to begin in June. We haven't even gotten to quantitative tightening yet. QE is over, but we're going to, quantitative tightening is when they let stuff roll off their balance sheet. Remember, that was the big thing back in 2018. Balance sheet runoff is on autopilot. That was a big boo-boo on the part of Powell. We may never get to QT at this point, because the Fed is going to have to give Wall Street what it wants to keep the S&P out of a bear market. But anyway, I think that the decline has been so orderly because people understand that without the Fed, this bull market is dead and gone. And so as long as the Fed was consistent, as long as the Fed wasn't, equivocating and vacillating back and forth, as long as they were consistently saying, yeah, we're going to jack up interest rates and we're going to start QT, the market could sell off with confidence. And nobody was buying because they understand, hey, without all this Fed, intervention, stocks are worth a lot less. And so we're not going to buy until those stocks have reached, a valuation that is reasonable. It's not a bad thing for stocks to go down. When stocks are going down for this reason, they're just saying, you know what, yeah, all these companies on Wall Street, they're not worth that much. These people don't deserve our money. We're not going to pay our money to these, to buy these stocks until they have a reasonable valuation. And I hate, I've gotten into the habit in the past of doing too many stock market videos in a row and, focusing way too much on the stock market. But I couldn't let today go. Today is what I've been waiting for. It's not quite, it wasn't full, it wasn't Jerome coming out himself and making these proclamations. But these are little whispers. The Fed is dropping hints. And obviously, Wall Street is picking up on those hints. Today would have been another terrible day for the stock market had Waller not intervened. And so since today worked, the Fed very well might do more of this in the future. This might be the result that they were looking for. And so the next 2 weeks are probably going to be critical. Because if the Fed is able to put a floor in this week and keep the S&P out of a bear market, next week they're going to have to build on that. Because just saving the market for 1 week is not enough. Once they put in that floor, they're going to have to push the S&P to new all-time highs. And the only way to do that is to backtrack. They don't have much room to cut. They've got 75 basis points. But depending on how serious they are about this, again, we don't know yet. I'm still speculating at this point. Say, hey, if this trend continues, where can they go? We could very easily see a 50 basis point rate cut with this month. But you know what? I think it is the Atlanta Fed, or is it New York Fed GDP now? I forget which one. they are still forecasting positive GDP growth for Q2, which would mean we're not in a recession because you have to have, by the Fed's definition, you have to have 2 consecutive quarters of negative growth. We had negative growth in the first quarter. Right now, their estimate is down to 1.8%, but positive 1.8%. If you see the Fed's estimates for Q2 GDP go negative, even though those estimates are never very accurate, they can vary quite a bit from the actual print, you might see the Fed start to save the stock market. Because, in their warped, sort of pseudo-Keynesian worldview, GDP is a product of the wealth effect from the stock market, as is inflation. Economic growth and inflation are correlated. That's why when we have high inflation in the economy, they call it overheating, because the idea is, well, we're growing too fast. Because they view inflation to be not totally synonymous with growth, but something that you get along with it, even though that's a totally corrupt and, I think, perverted way to look at economic growth. Economic growth should be deflationary. Things should be getting cheaper. Cost of living should be going down. That's how actual economic progress works. That's how the Industrial Revolution worked. The ordinary person during the Industrial Revolution became far wealthier because their money could buy so much more. Costs of living plummeted. The costs of goods plummeted. That's real growth. Economic growth is when when everybody in the country gets richer. That's how it should be looked at. But it's interesting. Even with the negative GDP print in the first quarter, the Fed was not immediately deterred. I will be interested to see how they react if they themselves internally start to think that there's going to be negative GDP growth in the second quarter. I don't know. Maybe they already think that. But what's funny is as certain as the Fed has been in their speeches until today, and as certain as I think Wall Street has been about the Fed's intentions, I've been more uncertain than ever. When there's been uncertainty in the past about what the Fed was doing, I felt quite certain about what the Fed was going to do. But right now, this is a tough time for me to try and forecast. You really, really got to look closely at every little move like this. So it'll be interesting to see what happens tomorrow. If another trapdoor opens up at 9:30 when the markets open, it will be interesting to see if the Fed sends out another speaker and what that speaker says. Will they try and save the day again like today? Or maybe will tomorrow be a genuinely positive day? And remember, we closed off the lows. The S&P did close green. It wasn't very green, but it was pretty it's a lot. Green at all is much better than being red, especially when you've been falling, 3+% on all these days. So, with that said, I will see you folks back here tomorrow.